Hey there, everybody. Thomas with Basecamp Trading. It is Tuesday, July 27th, and we're going to take a look really quick at why divergences are important, why momentum is important. And this is kind of the number one indicator I use on all of my charts. That's the MQ momentum. It's just a momentum oscillator, similar to an MACD. If you don't have the MQ momentum, you can use MACD. It'd be similar, not the same. Or you could also use something like an RSI, just any momentum oscillator. But what we look at is we look at the strength of current moves compared to the strength of previous moves. So you can see here, this was our last run up before our pullback in the NASDAQ. And then we just had a nice, really big run here the past week. NASDAQ recovered pretty good from that sell-off last week and then popped yesterday a little bit. And now we're tanking today. And one of the things that we've been looking at here is the weakening momentum between those two highs. So we compare this run to the last one, and you can see we had significantly weaker momentum on the indicator lines and on our histograms in both duration and height on this rally. Not only that, you look at the volume on the rally, even though we had a nice strong run, we had much weaker volume than what we'd typically want to see for a breakout to all-time highs. Now, in addition to that, one of the reasons we were expecting the indices to drop today, we talked about it first thing in the morning in the trading room this morning. We said, watch, the indices are looking bearish. We can see more downside here and look for the continued sell-off. If you go and you look at a lot of your mega caps, things like Apple, for example, you had the exact same type of momentum divergence. Here was our last rally, really strong momentum. Here's the current rally that's now tanking today. See how much weaker we are on our indicator lines and our histograms? And then you go look at another one, for example, is Amazon. Here's our last rally, lots of strength. Here's this rally, barely any strength on both indicator line and histogram. So it's a really good idea to keep an eye on momentum. Now, as all indicators are lagging indicators, there's no such thing as an indicator that leads the market. So everything's a lagging indicator. But we can extrapolate out from what we can see when we do use a momentum indicator, momentum oscillator, to kind of predict or give us an idea of the likelihood of a continuation of a current move, or if we're more likely to reverse like we are here. So again, keep an eye on momentum. This is what's been happening here today. This is why we're seeing this big, or one of the things that's leading to this big sell-off here, and why we were expecting it to pull back a bit on the indices. One of the reasons we've also been trading smaller size. If you've been in the trading room, I've been talking about that for the past couple of weeks. Hey, we're trading smaller size. We're decreasing position sizing, holding on to higher cash positions, staying hedged. And we still are doing that. But keep an eye on it because momentum is weak on a lot of stuff. Pay attention to your momentum overall. And this is just kind of like a overhead view of what I like to watch for with momentum oscillators. But that's it for now. Don't forget to like and subscribe. Make sure you follow me on Twitter @TradesWithTom. I'll post a lot of these types of setups there. And until next time, everybody, happy trading.